Hey guys, so today I'm going to bring you 6 different stocks that I believe that are underpriced. So no, today we are not talking about leverage ETFs, or maybe yes, maybe at the end, but I want to bring you 6 different stocks that I believe that are underpriced at the moment. So I believe that their value is here and the price is here. And when you have a high value stock where the market is not recognizing its value yet, sooner or later usually the price goes up to meet the value. This is what people call value investing, and today I'm going to show you 6 different stocks, and I'm actually going to show you also one additional investment that might replace all these stocks in a much more effective manner. So how I do this analysis, basically I look at different ratios of fundamental ratios of the companies. We are going to look at price to sales ratio forward, the PE forward, and other things. And we are looking at businesses that are benefiting from the AI revolution. Okay, these are stocks of hyperscalers, data center companies that the market hasn't been recognizing their real value. Now, if I tell you that I have a trading strategy where I have an 81% win ratio, wouldn't you want to invest in this strategy? So in this strategy is basically, I'm not trading, that's the number one, long-term investments. My average holding period for my stocks is 28 months, okay? So it's almost 3 years holding period, or well over 2 years, or 2.5 years at least. And I achieved this 81% win rate because I'm looking at underpriced stocks. I buy the stock, maybe it will not go up immediately. It might continue trending down for 1 or 2 or 3 months, but usually over time it goes up because these are good businesses. These are businesses with good intrinsic value. And by the way, all the stocks that I'm talking about today, I already shared them in my Henrique Wealth Academy. This is my Henrique Wealth Academy portfolio tracker, and as you can see here, the overall performance 63%, win rate 81%, compound annual growth rates 30%. This is really outstanding, and you can see here some of the stocks that I recently recommended, including Microsoft and MasterCard, which are 2 stocks. One of them I'm actually going to start talking about immediately. So Microsoft, it's down almost 30% since its all-time high last year, and the reason why people are selling Microsoft is because Microsoft has been investing a lot in data centers. Microsoft is at the moment, I think, is number 2 or number 3 hyperscaler data center company. You have basically the 3 biggest is Amazon, AWS, Google Cloud, and Microsoft Azure. And Microsoft Azure is definitely benefiting from this AI revolution. They have huge deals with big AI companies. But because they have been every quarter, they invest more and more and more. They invest from 10 to 20 billion to 30 billion to 40 billion every single quarter, increasing their investments in data centers. And now investors are afraid that they have been over-investing. Maybe their return on capital, return on investments will be lower, and that's why the stock is a bit lower. But according to what you can see here, let's jump here on the chart. And what we see is that the first thing is the price to earnings forward is now lower than it was at the bottom of the market in 2022. Okay, so 2022 we had a huge bear market, right? And when the price to earnings ratio was at this level until now, well, or until recently, the stock more than doubled in price. So really, this level of price to earnings ratio on Microsoft has, the last time it was seen was really at the bottom of the 2022 market crash, or bear market. And if you have bought Microsoft back then, it will have been an amazing deal. The price to sales forward, same story, is now pretty much at the bottom, at the same level it was in 2022. And the enterprise value to EBITDA is also even lower than it was back then. So yes, I have been adding, me and my community have been adding Microsoft to our portfolios. And if you want to check the Henrique Wealth Academy, link in the description, 7-day free trial, you can cancel anytime, no questions asked, okay? Okay, the second stock I want to share with you is Amazon. Amazon, okay, it's another big AWS, AWS clouds. And what we can see is a similar story. The price to earnings ratio forward is extremely low. It's at 30 or 26 at the moment. Yes, 26, which is very, very low. It's one of the lowest levels of the last few years. The price to sales ratio is not that low, but the EV to EBITDA is also pretty low. So when you buy a stock, you are a business owner, right? You are a business owner, and what you want to do is buy businesses that are underpriced, right? Sometimes a stock going down is good for long-term investors and for business owners like us. I'm not a speculator, I'm a business owner. I buy a business and I expect it to perform well over time. Of course, I want to pay less for that business, and opportunities like these are opportunities to pay less for great businesses. Look, Amazon, since the bottom of the dot-com crash in 2001 until now, is up 80,000%, okay? And now it's an opportunity to buy it again and benefit from what's coming in the future. Because Microsoft, Amazon, and the other stocks that I'm going to tell you in this video, they are not going anywhere. They are not going bankrupt. They are benefiting from the AI revolution. And even if there is no AI revolution, we need more and more data centers. We need these technologies. And these companies are just the top companies in the market that for some reason now are underpriced. That reason might be people have been piling up into the semiconductor industry. Semiconductor, computer chips, and so on, people have been piling up. They have been forgetting that there are other great businesses out there, including Microsoft, Amazon, and the next company that we will look at too. Okay, so the next company I want to talk about is Meta. Meta, they have been also investing a lot in data center. They are increasing the revenue from their advertisement on Instagram, you have Facebook and all that stuff. But at the moment, they also similar story. Their price to earnings ratio forward is significantly below the average over the last few years, okay? The only time it was at this level was also again 2022. And if you bought, well, I was buying lots of Meta back then. If you bought at the level of it was back in 2022 and you sold at the top, at the recent top, you'll have made a 500%. And now it's still 400% up since that bottom in 2022. Price to sales forward is also quite low compared to the average of the last few years, and the same story for the enterprise value to EBITDA. So Meta is also another stock that I have been recommending it also for a while in my community. In fact, my community bought already Meta long time ago. The next company I want to talk about is Nvidia. Yeah, Nvidia had a huge bull market over the last few years, but this year is really lagging behind. And Nvidia is still the market leader when it comes to GPUs for AI training. They continue innovating a ton. And at this precise moment, as you can see, PE ratio forward, it's extremely low. It's probably at the lowest level in 10 years or so. Can you believe this? Can you believe that Nvidia, a stock that went up so much, now the price to earnings ratio forward is lower. So a stock that went up 1,000% over the last few years, now you can consider the price of the stock cheaper than it was a few years ago. Very, very impressive, right? Price to sales ratio forward is also below average, and enterprise value to EBITDA is also pretty close to the lowest in many years, since like 2017 or so. So Nvidia is definitely another stock that I would consider to buy at this level. Next, we have Netflix. Everyone is hating Netflix at the moment because a couple of different reasons. One of them is that recently, this year at least, they don't have any like big show, right? There was a few years ago, they had like, I don't know, Breaking Bad, they had the Squid Game. I don't watch TV shows. I think it's a waste of time, but that's just me. But the Nvidia at the moment is really underpriced. Let me jump here on the chart and let me load Netflix. Netflix this year, the price declined very significantly from the top until now is down 41%, 41%. And when we look at the price of the stock compared to the earnings, is also at the lowest, wow, at the lowest in many, many years. Price to sales ratio also below average, and enterprise value to EBITDA also pretty low. So the price that you are paying at the moment for the business that Netflix is, it's the total bargain. Okay, and the last company I have to bring to you is also a huge winner that also recently has been lagging behind. And this last winner is Palantir. Okay, Palantir is a very interesting business. You can call Palantir like the operating system of AI. And recently the CEO, Alex Karp, was giving some interviews where he talked about the business and talked about the fact that, you know, big enterprises, government, hospitals, logistics, military, police, they cannot use a normal AI because if they use Claude or OpenAI or ChatGPT and so on, the data goes to these big companies. And big hospitals, logistics, enterprises, military, they cannot share the data with ChatGPT, okay, or with Claude, Anthropic and OpenAI. So they need to use a layer, protection layer, that one helps them to make sense of all the data, and number two has these handrails and the security to share data with the AI. Okay, so what we have, it's similar story, you know, the drill. Palantir is down 30% from all-time high, while the price to earnings ratio is also pretty low. Price to sales forward, same story, and enterprise value to EBITDA. If you have bought Palantir last time, it was at this level in terms of price to earnings forward. Now you'll be up 400%, okay, 300 to 400%. So these are the stocks that I wanted to bring to you, and Palantir is actually my biggest bagger of all time, over 2,000 profit, because back in late 2022, I was buying the dip. I was scooping all the stocks I could buy, and Palantir treated me very, very, very handsomely. But I told you that I'm not buying these stocks. Actually, I have two portfolios. Let me just rewind a little bit. I have two portfolios. I have my individual stock portfolio and I have my ETF portfolio. And the thing is that you can, of course, invest in individual stocks, and I've been doing it, and it's performing very well. And I share all my trade alerts in my Henrique Wealth Academy, link in the description. So you can go ahead and buy these stocks. But there are other alternatives, okay? There are ETFs that pack these stocks under a wrap. So instead of going and buying 6 stocks, these are 6 stocks, right? You can buy an ETF that contains these 6 stocks. And there is actually one ETF that is very concentrated, because you could go and buy S&P 500, but the S&P 500 is 500 companies. Okay, you don't go buy 500 companies just because you want to have exposure to 6 companies, right? But there is one ETF that actually gives you the exposure to 10 companies, to the FANG plus companies, and this is a microsectors ETF. I don't have any relationship with microsectors, but as you can see here, the FANG Plus index includes Meta, Amazon, Microsoft, Apple, Alphabet, Google, Micron, Nvidia, Netflix, Palantir, and Broadcom, all good companies. And they have also the leverage versions of these ETFs. So if you want to get the 1x leverage, you could go for an FNGS, and then you have the 2x leverage ETF, FNGO, and the 3x leverage ETF, FNGU, as you can see here on the screen. Now, personally, I'm doing FNGO. I have added FNGO to my ETF portfolio, and since then, it's actually already going up a little bit, but it's never too late. And these are companies that you could potentially just hold forever, okay? These are good companies. These are companies that will benefit from the AI trends. When I buy a company, when I buy a stock or an ETF because it contains certain stocks, you need to ask yourself one question, which is, will these companies be around 10 years from now? Are their businesses relevant to the new technological trends that we are seeing at the moment, okay? Because maybe some companies, they are not so much, not so sure that will be around 10 years from now, okay? I wouldn't buy probably certain sectors such as, I don't know, the cinema industry, for example. It's a pretty tough one. But I know that Meta will be around. People will not stop using social media platforms, and Meta is also pretty strong when it comes to AI and data centers. Amazon will be definitely around. Microsoft will be around. Apple, most likely. Alphabet, Google will be. Micron will continue growing. Nvidia will continue growing. Netflix will continue growing. People want to Netflix and chill, I guess. And Palantir will continue, and Broadcom will continue. So this is one of those ETFs that you could potentially buy now, close your eyes, hold it for 10 years, and 10 years later, you wake up and you are very happy with your portfolio. And that's pretty much it. All right, guys, let me know in the comment section which of these stocks you already own. I would love to know if these stocks are already part of your portfolio. And let me know if you want me to take a look at any other stocks. And in the meantime, check the link in the description, Henrique Wealth Academy, 7-day free trial. No questions asked if you cancel the trial. You can find my stock market investing course, as well as my ETF investing and my daily posts there. And if you enjoyed this video, give it a like and subscribe, and I'll see you soon.